My name's David Morris. I'm with the current and former Breaker magazine. Unfortunately, we're winding down, as some of you may have heard. I'm here with three distinguished panelists to discuss some of the local politics of setting up mining operations and some of the decision-making processes as far as electricity supply and some of the other bigger picture issues around mining, but filtered through localities and what local leaders want to hear from miners. My panel today is Alex de Vries, an independent researcher who writes at digiconomist.net. Frank Holmes, who is a interim executive chairman at Hive Block. Oh, sorry, we got the order wrong. Wes Fulford, who is the CEO of Bitfarms, and Frank Holmes, interim executive chairman of Hive Blockchain Technology. And we're here to hopefully give everybody a real hands-on view of the mining industry and what the decisions are that set it up. We're probably just going to go through a few questions and have a free-flowing conversation. But to start, to get kind of the basis for what we're talking about here, I guess I'll kind of just poll everybody. What are the issues that you encounter when you're talking, or I guess in Alex's case, sort of a 100-foot view, what are the issues or questions that come up when a miner is thinking about locating in a particular place? What do local governments want to hear? What are the issues that are discussed when you're sitting down at a table with a mayor or a city council or a local power authority to discuss the possibility of doing a deal? And let's start with Frank down at the end.
Well, I think the big thing we've experienced is how many jobs you're going to create locally. And then when you go into jurisdictions like Sweden and Iceland, they also want to know about your overall business model. And one of the things that we've focused on when we launched Hive Blockchain was Ethereum and GPU cards, and using GPU mining, which has a different longevity than ASICs chips. So we are able to go in and explore down the road rendering and AI, and that made it much more interesting in that community that we have something else besides just Bitcoin.
Very interesting. So Wes, what about you? What sort of discussions have you had to have when setting up your business?
Yeah, it's certainly working with the local politicians and municipalities, explaining the technology, the applications, exactly our size, scale, our professional operations, and really just demonstrating that we can be a good partner in the geographies that we operate in terms of repurposing industrial scale real estate that's sitting vacant, local job creation, being a strong revenue payer in terms of our energy consumption, et cetera. So.
And Alex, obviously you're more of an analyst, but what are the issues that you see come up?
So just taking a step back. So if you're a miner, you're obviously, when you're locating somewhere, you're primarily looking for two things. One is low-cost energy. The other is reliable and steady energy. And low-cost energy, I think that's pretty straightforward. But reliable and steady energy, that's a multi-factor. It can be about political factors. It can also be simply power grid management. Because as soon as you have a mining facility coming onto your grid, the local power companies are going to wonder, okay, how are we supposed to manage that? Because these mining machines by default are running 24/7, increasing baseload demand. So if you're a power company, and you have to deal with fluctuation in production or with fluctuation in power demand, and you have peak hours on your grid, you're going to have to find a balance for that somehow.
So I kind of want to join the two things, because Wes, it was really interesting. You said existing industrial infrastructure, and I'm familiar with a case relatively recently. I forget who it was going to set up a mining facility in an old aluminum plant in Texas, and that hasn't gone through yet. But what kinds of facilities I don't know if there's a specific case you've dealt with where that electricity demand overlaps with what the previous purpose was?
Key to our build out to date, and and our power contracts that we've secured to underpin our growth going forward is working in municipalities where we've identified surplus energy production. It's not being consumed locally, and there's more energy being produced that has to be exported down to the northeastern U.S. or New York, et cetera. So it's important that we're a good partner in the municipalities that we are operating in terms of minimizing any potential impact to residential customers by overloading the grid. And we've worked to develop a framework around a load shedding program where during peak winter heating months, i.e., the 2 hours before you head off to work and 2 hours when you come home, when 95% of the energy in Quebec powering residential households is electricity, we'll work to pull back our demand during those times just to maintain our sort of good operating standards.
And those are negotiations you've made with the power provider, right?
Yes.
As part of your contract.
Correct, yeah.
It's interesting from a macro perspective because there's a lot of discussion around smart grids and making the grid more interactive. But what I'm hearing from both of you is that some of the benefit of mining as an application for electricity comes from the fact that we don't have smart grids right now, that there are stranded local power supplies. Is that part of your pitch? Frank, is that something that you talk to people about? We're going to make more of your electricity than you can right now?
Well, I come from as an investment manager. I'm a chief investment officer also of U.S. Global Investors, and I write, and I have about 50,000 followers in these countries, and I try to comment when I go to these local communities to be aware that the Bank of International Settlements is anti-gold, because I've written and financed gold mining companies, as much as they are regarding Bitcoin and Ethereum. And then I drill down and start getting to the granularity of what's just in the community. But right now you're seeing, you're having a lot of people in Norway have this knee-jerk reaction, and politicians push to say if you're doing Bitcoin mining like they did in Washington State, that all of a sudden we're going to increase your fees. And there's a disconnect that's taking place between what is the anti-crypto is also anti-gold thesis by the Bank of International Settlements, and are they aware they're getting pulled into this? And then I explained to them that we've gone to visit with you, and we want to partner with you because you have stranded electricity, or you have the spare capacity of electricity, and especially in northern Norway, there are communities in northern Norway that they have zero electricity costs. They have so much of a surplus. And so the building out the idea of becoming a major player for the Googles of the world is just not just crypto mining, but you have this inexpensive electricity. And our partner, Genesis Mining, and actually that's how they started. They went to Eastern Europe and they found stranded electricity for 2 pennies, and that's how they started building their company. So that's our thesis.
And then obviously there's a benefit to just the world to use that electricity in some productive way, but what sort of impacts are you able to tell people about for the local economy, for jobs, for things like that from a mining operation?
I think the biggest thing on the job is the build out, the creation, building the infrastructure, the maintaining of these mines. You have to be sort of manage expectations. A lot can be done remote, and they have to be aware of that. But it does create economic development in the area. And especially you want to tap into if they have technology schools nearby. That's what you want to try to employ. That's sort of what we looked at. Wes is in mining in Quebec. And a lot of people don't realize that Montreal is becoming the AI center of the world. Microsoft can't attract these PhDs to move to Seattle, so they're hiring 5,000. They're building a campus for 5,000 scientists. Well, they're all going to need these data centers, and they're going to need GPU cards. They're going to need this other space. So it's a bigger ecosystem, and that's what we try to communicate, that Bitcoin mining can all of a sudden initiate this infrastructure, but down the road, it can evolve to something much more profound and significant, like smart cities.
Yeah. Wes, what about you when you talk about economic impact or development, things like that?
Yeah, back to your question about the type of customer that we represent. We are operating solely in Quebec. It's virtually 100% renewable hydropower grid. virtually all of those dams are owned by Hydro-Quebec. It's a monopoly on power distribution in the province. And as a customer, as a Bitcoin miner, our energy consumption is very, very predictable. We draw the same amount of power 24 hours a day, 7 days a week, 365 days a year, and that power is being sold locally. They don't have to incur transmission costs. So in terms of, in particular to Quebec, we're a grid. These turbines are turning 24 hours a day, powered by rivers. We're a very attractive customer, and we've become a large participant in that grid system. We're currently growing and building another 30 megawatt facility in the municipality of Sherbrooke, and have grown to become an important customer for the power producer.
Yeah, and I assume that's not insignificant, just to have somebody who is there to pay for the electricity when it's available.
For sure.
Alex, have you done much thinking or research about economic impacts?
Well, definitely thinking a lot about the local economic impact of mining, and especially thinking about mining business as a partner for local governments and power companies, because in the end you have to realize that mining business is often fully dependent on developments in the Bitcoin price. And as we saw like last year, there was obviously a major market crash, which amplified again at the end of the year. So by November, December, the Bitcoin price went down from like $6,000 to $3,000 per Bitcoin. And that's where miners got seriously squeezed. And that got a few miners into trouble. So I'm just going to bring up a specific case here. In Virginia, there was this mining company called Because. And because of the drop in the Bitcoin price by the end of last year, they had to file for bankruptcy. But that has obviously a lot of implications for their local partners, because they had received a $600,000 government grant. They had $1.6 million in unpaid bills to the local power company. Obviously, those parties all have exposure to the Bitcoin mining companies as soon as they enter your grid. And if things go wrong with the Bitcoin price, and we all know the Bitcoin price is like the weather, you can't predict it. It can go up 100% in weeks, it can go down 50% in weeks. You might be suddenly facing a partner that's not able to pay their bills anymore. So in essence, mining companies, and not because the people inside the mining companies have bad intentions, but more because of the nature of the business, tend to be less reliable parties to local governments.
But I assume that part of that has to be because this is still relatively new, and we're kind of figuring things out in terms of the kinds of fluctuations. Obviously, the price changes a lot. Maybe in certain localities you can have electricity fluctuations, and then there's difficulty, which we've seen doesn't always correspond to the price. So Wes and Frank, what have you done to prepare your businesses for the fluctuations of Bitcoin price or other factors to be more sustainable and to be able to weather the unpredictable factors?
Well, that's always been a challenge for Hive Blockchain, because it was the first to come out of the box, and we raised in 3 months $200 million in the capital markets and ushered in a whole blockchain public community in Canada. But the challenge has been when you have a strategic partner, and how do you manage those issues? So that becomes a real interesting exercise for us, and recognizing being public in capital markets, and you have to, at the same time, educate that the investor, a lot of investors have put money into Hive, we're not cognizant of hash rate and how that impacts your cost structure. And so the strong correlation to rising Bitcoin prices, and all of a sudden the ASICs chips start rising in value, and all of a sudden more people are coming to mine, your hash rates go up. That compression of margins and then that expansion, we've had to do a lot to educate our investors with that, and then partner with Genesis Mining to realize they have to help us in that educational process. These are the factors. So and it's like gold mining industry in respect that you could get these expansions and contractions of these factors. Most important is to educate everyone that cheap electricity, stable electricity is the #1 sustainable factor. And I've looked at it as, from my own personal experience, it's very much like fracking energy. That is, when you are fracking for oil, you hit 1,000 barrels a day. A year later, it's only 50. So you're continuously on that treadmill that you have to be drilling and drilling and drilling. And here, you have to be taking 30% of your cash flow and redeploying it into cheaper chips or new opportunities, because there's like new chips coming on stream. It's so powerful and so fast. If you're not going to spend money on a rapid basis, then you will be history, just like the fracking
To
space.
keep up.
So you must maintain a portion of your cash flow. So I have to educate that to investors, as well as I have to inform a private company that's Genesis Mining that this is what information we need, because this is how you're going to have to prosper in this industry.
Wes, what about you? How do you think about these fluctuations and how to mitigate them?
Yeah, I agree with Frank. You definitely can't stand still. You have to make an assumption that network hash rates and participation globally will continue to increase. We have some strong views on how fast that's going to occur with the limitations in new chip design and the lack of efficiency bumps we're seeing with new generation hardware versus what we've seen historically.
So you feel like we're hitting kind of a inflection point?
The fact is 2018 was a tough year. There was a lot of capital raised in late 2017, early 2018, which was used to purchase miners, and people went out to find places to plug them in. It took them a relatively long time to do so. But we saw a 73% drop in Bitcoin from Jan 1st to December 31st, 2018, and we saw network hash rates peak at 288% growth in mid-October. Since October 18th was the first small drop in difficulty we saw, or second of 2018.
I'm curious, from the miner's perspective, you know, as a journalist, we love to have like terminology for things.
Yeah.
Internally, when this was all happening, you were seeing price go down as difficulty went up. Is there like a term for that? Is there I want to call it like some sort of squeeze, right? It's a weird cross.
Yeah.
I've never seen it before. I'll try to go look back in this short history.
Yeah.
And I couldn't identify that. But you've seen it in cycles, I know, in the gold mining industry, where most times gold falls below its 50-day and there's capitulation, everyone sells their stocks. Vice versa, when you have this sort of secular bull market we had in the gold space from 2002 to 2007, that in every correction, you actually had more buyers coming in. And then the gold stocks and gold would go to a higher level, and then more buyers. So I remain very optimistic, because we had an expansion in the growth of wallets during this phase. And so even at the beginning, you had more and more people coming into the space that was falling. And I think that you've expanded the audience of believers.
So one last question on this sustainability quickly for the two of you. Do you, when you're mining, do you sell into spot markets? Is there strategic selling, or do you sell at whatever the daily rate is when you mine something?
Our models are very different. We've, since the inception of the business, we've maintained the practice of selling our daily production on a very regular basis, every couple of days. And that was from a capital markets standpoint, really to separate out the asset management model. If you want to go buy crypto, you can buy a future, or jump on an exchange and purchase crypto directly. We're an infrastructure play in an evolving ecosystem that's providing an essential service. It's the validation and verification of trades that we're doing. This whole blockchain cannot function without the service we provide. So we've separated out the asset management model by monetizing our production. And the second reason we do that is because we can do better returns, redeploying that cash flow into our operational growth. And we can inventorying, even if you believe Bitcoin's going to double again from here.
I'm much more, as a money manager, I brought a quant approach. And so if you look at, and we write this on our website, the daily volatility of the S&P 500, one standard deviation, 170, approximately 70% of the time, it's a non-event to go up and down 1%. Same thing with bullion, 1%. And what happens with crypto is it's more like 6 and 7%. So it has much greater dollar volatility. So how can you use that volatility to your advantage of selling into it versus mining when it falls? So when you start going through this extreme falling period, can you sustain? Because that's usually the best time to be able to buy, to mine coins is almost when the margins are at their weakest part. That's when you have the courage, because when they start to explode, it's easy to sell into. We partner with a group out of Hong Kong, Amber AI, and they also have a quant approach and use a lot of AI for trading and positioning, and they've been very successful. So we put some of our coins with them to try to optimize that.
Okay, so you're more strategic about it. Alex, we've been talking about hydroelectric sources. We've talked about stranded energy. Alex, you've done some independent research on sustainability and sustainable energy sources. Obviously, as we've heard, just consistent, even cost energy is pretty crucial to the business model for the miners that we have on the stage here. What is the kind of relationship that you've found in looking at sustainable energy sources between sustainability, price, business models, like, is there a big motive inherently for miners to seek out sustainable energy sources?
I think in general, miners don't really care much about sustainability, and I think that was confirmed by the second global cryptocurrency asset benchmarking study that was released by the end of last year, which surveys among miners. What happens is that they seek out low-cost energy, and low-cost energy is in some cases a surplus of energy, which happens to be renewable, which is nice for the rest of us, but not something that's particularly high priority for the miners themselves, right? They just care about getting the low-cost energy.
Do we know what kind of the overall percentage of hash rate coming from renewable energy sources is?
Well, there's various numbers on that, various estimates at least, and most likely they're all wrong, because it's really hard to pinpoint where mining is actually going on. You've obviously got some public sources you can rely on, but those are often flawed. You can't see where a mining facility is located. First of all, you don't know whether there is a mining facility or not, and you can only see the number of nodes in the network, but you don't know if the node is a mining pool, and you definitely don't know if it's located in country X or country Y. What is still the common assumption in the Bitcoin land is that the majority of mining is located in China. And we don't really have a percentage of that. I think most people are still assuming around 60%. No confirmation. And if that is the case, then there's probably still a pretty big majority of the mining in China happening in places like Inner Mongolia, which is very reliant on coal-based energy. That was one of the conclusions from the study I just referenced as well, is that Inner Mongolia is a very big place for Bitcoin mining, and in Inner Mongolia they're actually 100% reliant on coal-based power. So yeah, there's mining going on with renewable energy, there's mining going on with well, the worst kind of power, because coal-based power is the dirtiest you can get. But there's no way of knowing the balance between those two, unfortunately.
And the two of you have, whether by design or strategy, or whether by design or not, are sitting on renewable energy as part of your mix. I mean, are there strategic advantages, or is it just, as Alex says, that's where the energy is cheap and reliable?
I think if you're a public company, it's very significant to have that positioning, that you're green as much as possible. And I know that I've done so much research on the rhetoric of being anti-Bitcoin and this whole ecosystem. And as I mentioned earlier, so much comes from the Bank of International Settlements in that drive, in that publicity. And so they're drivers behind all the energy consumption, et cetera. When you dig down, you find out that's predominantly China, Kazakhstan. Most of these countries are coal. And so the solution to all of that is, it's open ledger, only be able to buy Bitcoins or Ethereum mined in North America for ETFs in North America, and that would create the bifurcation that all those Russian coins all of a sudden are worthless, those Chinese coins are worthless, and you get to a real, where you have transparency, and you have accountability and responsibility, and you stop this coal mining to drive the process.
Of course, you'll have people really want to fight you about that because
Sure.
it's anti-fungibility. But Wes, did you?
Yeah, we have the luxury by design of operating and powering our facilities on 100% green hydroelectricity. And the benefits of the grid we operate on is it's very, very stable, as I mentioned before. We continue to evaluate other opportunities to expand our power portfolio and diversify into other jurisdictions. But the fact is Quebec's a great place to operate in terms of political stability, availability of technicians and employees locally to run and build our operations. So it's no reason to continue looking elsewhere at the moment. But I think generally speaking, people would love to see some of that incredible amount of hash power diversified outside of Chinese borders and moved over to North America. But it really is hard to say how much is being powered locally in China by coal and other fossil fuels.
Alex, it seemed like you might have a response to Frank's comment.
Well, no, something I want to add is that obviously we're talking about electricity use here, and obviously there's no way of telling, okay, where are these miners located and stuff like that. But one thing that's for sure is that regardless of where miners are located and regardless of how green their energy is that they're using, we have to realize that the current generation of mining machines well, I think there's roughly, or at least 4 million devices in, let's say, the current generations of active mining machines. And all those machines are specialized equipment with the sole purpose of mining Bitcoins. And at some point, they will become obsolete. The new generations of mining hardware are now starting to be produced, and it will obviously take some time before they are commonplace. But as soon as the current generation becomes obsolete, that whole generation of 4 million, at least 4 million devices is going to become electronic waste. And one thing we know of electronic waste is that 80% of it is just going to end up in environmentally damaging landfills and incinerators. So it's not so much about the electricity use, but also about what happens to the machines when they are done using electricity.
And Frank, that was something that you said earlier that you, I guess I wasn't quite clear, you do mostly GPU-based mining, or?
That's we started as a GPU in Iceland, which is geothermal renewable energy.
And those machines are perhaps a little bit more long-lived.
And like it's a classic in meeting with Gabe Layden, who started the Machine Zone, and also Smart Cities, that we could process 100 million instructions per second, which would be enough for these games that they create, or creating a smart city. So we believe that we're going to have this longevity beyond just the GPU cards being used for mining Ethereum and other related coins. And then we've expanded to Sweden, which is predominantly GPU. Our Bitcoin mining is done in the cloud with Genesis Mining, and our growth opportunities are going to be no doubt in America. We are strategically looking at America and Canada. We announced a major investment in a company listed on the London Stock Exchange this week. We bought 15% of Argo, and Argo is right near you, Wes, in Quebec. That's where they're mining. So that'll be the first sort of step of going into North American mining. But I think this is where our cash flow and capital will go.
So one last kind of lightning question for everybody, because we are talking mostly about North American mining and geography and kind of how these flows work. What does it mean to either the macro level or for each of you as businesses when there's talk that China is going to ban mining? Let's start over with Frank.
That's what they say, you know, that's always a debate, what's the rhetoric and really what takes place. So I find it difficult that they will actually do that.
Yeah. Wes, any impact for you?
The very fact that we're not operating in China, I think it's great for Bitfarms. I'd love to see more diversification in the hash power globally.
You know, coming back to this whole idea of me getting in this business, I was trying to launch an ETF. And I went through the SEC process and realized that $1,000 an hour, that was a cul-de-sac. I was driving down a dead end because of AML concerns. They're so significant. Then I went to Ontario and went to Launchpad and found out quickly AML concerns were just going to be a preventive for going into it. But mining virgin coins, that is something I don't have an AML concern with. And that's one reason why I pivoted to go into those coins and mining them. And now I see another level that if you want to have an ETF to be launched here, then the easiest way to do it is only be virgin coins and only from North America, then there'll never be an AML concern. And that would create a huge market.
Well, that's an interesting idea that I think we'll have to save for discussion another time. Thanks to all my panelists. We are out of time, and we'll be around afterwards for questions if anybody has any.
Thank you.
Thanks, everybody.